The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the October 21st terrific Tuesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I hope everyone is off to a great start of their day. Let's make sure that you and I, that we do all that we can do to have a terrific Tuesday. And one of the best ways we can do that is to always remember that if we practice the power of letting go, we're able to leave behind our burdens. You got to love it. You see, to let go does not mean to stop caring. It means I can't do it for someone else. To let go is not trying to change or blame another. It's to make the most of yourself. To let go is not to care for, but to care about, folks. And lastly, to let go, it's not to regret the past, but to grow and live for the present moment and the future, folks. I say maybe one more thing. To let go is to fear less and to love more. And I sure do love you being here with us here at TFNN. And I'd love to hear from you. So give me a call at 877-927-6648. Internationally, 727-445-1044. Remember, if you've got a question, then somebody else has that same question. So don't do it for yourself. Do it for someone else. Some kind of nice act of random kindness out there. It is Terrific Tuesday. This is Tiger Financials Network. I'm Steve Rhodes, and welcome to the show. Dow is up 66 points right now, trading out at 16,466. S&P up 17, trading at 1922. Composite up 49 points, trading at 4365. Russell up 8 points. She's trading out at 1103. The DAX up 140 points. The FTSE up 88. We'll check in on those. Goldilocks up $6. Silver up 16 pennies. Light sweet crude up 88 cents out here. Looks like most of the sectors, well, the XLP is off 13 cents as we speak right now. Leading the chart here dollar-wise, the upside is Chipotle. You got Chipotle up 17 bucks. Alumina up 13. Waters Corp up $7. Signature BK New York up $7.50. Carlisle Company up $5.50. Biogen up $5. Allegrin up $5. Valiant up $5. Canadian Pacific Railway up $5. Charter Communication up nearly $5. Alliance Data Systems up $4. FedEx up $4. Maybe FedEx was out with numbers. To the downside here, struggling is Chipotle off 6%, a little under 6%, down $36. It was IBM yesterday. Chipotle on fire to the downside today. Lockheed Martin off 7. Rhino Resources down 6. IBM off 6 this morning. You've got Brinker International down $3. Kaiser Aluminum off $3.40. Arm Holdings down $3. Coke down $2.73. Yet the market motor's on. And why? Because we've made a significant bottom, a very significant bottom out in the marketplace. Let's take a look at. Let's go take a look at the DAX and the FTSE here. Let's go see what they are doing, see if we get some kind of reading out here. This is the daily chart that we're looking at inside of the DAX. So the DAX now, let's take a look at its retracement. It's going to have to work real hard to play catch-up to our markets here. I think it is. It's not even to the 0.382 retracement level. So the DAX on its way to 89.41. DAX market does not look as strong as the U.S. markets. In other words, we don't really have much in the case of in the way of any kind of V-shaped out here for its bottom, unlike the bottom that we saw back here on August the 8th. Does that mean that it's a sign that our markets are going to croak or something like that? Heck no. It's the DAX. It's Germany out there. They should be struggling. If we take a look at the, I don't even know what I meant by that, but their stock chart is. If we take a look at the FTSE out here, the FTSE has got this key. Let's go pull this back here. The DAX had it as well. Let me see if I can get that the data out here. Inside the FTSE, I had this thing, well, Take this back. I had a consolidation pattern out here. Hey, look, let's just look at the FTSE and see what it's done. Let's not get too caught up into it. Now, the FTSE was making lower lows out here with less relative strength, and that was on October 16th. And a nice big bullish engulfing morning star candle that formed out here on October the 17th, so that's a positive. If we take a look at retracements from high to low out here, the high inside the FTSE that I'm going to use is September the 4th down to the low out here on October the 16th. It too has not made the 0.382 retracement, but it should get up to 63.90, 57. Shouldn't have any problem doing that out there. That's what's going on inside those two markets. Let's take a quick peek at it. I didn't look at the international market, the Asian markets. So let me go ahead and do that. The Nikkei, interestingly enough, was off 307 points out there, and it was up the other day, yesterday. So it took back all the gains from the prior session. Now, it was a big, huge move on Monday morning out here, because take a look at this. This candle out here is as bullish as you can get. Because take a look at what it did. It's not really referred to as a gap up, but if you look at the trading session on October 17th, take a look where it closed, right at its lows. And the open of the trading session on October 20th, it was above the wick at 14,830. Open 14,820. No, it wasn't above the wick, but it still qualifies as a bear separating line, bull separating line out there. So even though it took back most of those gains yesterday, that should be a significant low inside of the Nikkei as well. That's at the 14,529. Hey, let's go out to one of my favorite cities, Colorado Springs, to our man Scott. Scott, thanks for calling. Thanks for holding. How you doing this morning?
Good morning, Steve. Good. How are you?
Excellent. Thanks so much for asking. How's your fall out in Colorado Springs?
It's right now. The last few days have been beautiful.
Good.
Just simply beautiful. It's
good.
gonna get a little cooler here soon, but hey, that's the way it goes.
Yeah. So is there some snow on the top of Pikes Peak at this stage of the game?
Yeah.
Oh, is there always snow up there? Is there always snow up there?
99% of the time, yes. There is some snow. Yeah.
Well, cool. You want to take a look at the Euro Japanese yen. Tell me what you're doing, how I can assist you.
Well, I was wondering, I have your newsletter, and I know how you correlate the yen to the market, and I'm wondering if the yen should follow our market. If, as you say, a bottom is in, should the euro yen follow the market to the upside within the next 3 to 4 months?
It's a correlation that has worked really, really well. I've lightened off of it as of recently. Now, what I can say is if we take a look at the correlation, and that's what I've got up on Tiger TV right now, as our markets were making a low, the euro yen was pretty much just making a horizontal low. It was just coming back and making a move of a move. It did get just slightly below that on the October 14th trading session out here. So the correlation is out there, but it has come a little bit unglued. Sometimes when the correlations don't work, it's best to just step away for a while. So it's worked slightly, but I'm not using it, and I haven't really for a number of months used it as significantly as I had in the past. And it just, Scott, just simply, I think when things start not working exactly, it's just best to maybe move away from it and take a look at other, patterns that are out there inside the marketplace.
Okay.
Does that now? Are you trying to trade that currency pair, or are you trying to use it in correlation to the markets, like your question?
Yeah, I was going to. Well, I was thinking about trading the currency pair along with the market, but like you said, it has unhinged for the last few months. So that's why I thought, well, I'd see what you had to say about it.
My thoughts for a currency pair would be to go ahead and try to focus on the euro itself. Now, and the reason that I would suggest that is that, and I'll put the euro on my screen out here. Now, the euro is back about 600 pips this morning. Right now, trading out right around the 127.33. That's not even the live feed. Let me switch to so I can get the live feed by just simply going to the futures here, and then I don't have a delay for you. So let me do that. Now, here's the reason why I'm going to suggest taking a look at the euro. And I'm going to put this chart up on my screen as well. So let me go back, and it's the analysis of. First, I'm going to start off, Scott, by taking a look at the commitment of traders data. And on the commitment of traders data, which I include, in the expanded edition of the newsletter out here, what I've got is I'm going to put up the U.S. dollar index. Now, as I put up the U.S. dollar index, and I take a look at what the large commercials are doing, we had the U.S. This is the weekly chart. We had the U.S. dollar index, really just make one huge rapid rise. And it's possible that it was a potentially, it could be categorized as a kind of a blow-off top, similar to what it did back here in the June 2010 timeframe. But I don't really want to go there. What I'm looking at, what I'm focused on, Scott, is the bottom portion of my screen, which is taking a look at what the large commercial traders are doing, big money traders out there. And they're now up, just if you only looked at the U.S. dollar index, they are now up at levels almost as high as back here in October of 2015. And I think it means something. And it's something to pay. And because the euro is such a significant portion of the U.S. dollar index, I think what this is saying, I know it's hard to believe, even hard for me to believe, but it lines up with what they're doing in the case of gold and silver and light sweet crude out there. They're saying that the U.S. dollar index is ready for a significant pullback. And that would mean that the euro is very likely on its way to make a fairly significant move. Now, the cool thing about that is it's pretty easy to buy into it because the euro has gotten hammered so much. If we take a look at the euro, for it to even, and the euro just made its first A to B equals CD to the upside on a daily basis. And that says to me that there's a change in trend. Those A to B equals CD patterns help us to really understand when there's a change in trend. And so it has made that first pattern. It completed that pattern on the trading session of October the 15th. So all that the euro is doing right now is really just pulling back. So what you want to do is if you want to trade the currency pair, you want to go take a look at maybe some intraday patterns, because I think that what the commitment of traders data is suggesting is the euro's made a bottom. And the cool thing about that is that just a counter-trend rally. Just a counter-trend rally from its most recent swing point, which I'll say is May 8th, down to the low that came in here, Scott, on October 3rd. That gets us up to about the 130.08 level. That's just a dead cat bounce. That's not even really a normal bounce. So it's got more room to run to the upside. That's why when I take a look at what the commercial traders are doing inside the U.S. dollar index, what gold is doing, the euro's got more room to run to the upside. Gold's got more room to run to the upside. Silver does. Light sweet crude probably does as well. And you want to try to find those A to B equals CD patterns. Is so far what I'm saying making logical sense?
Yes, sir. Yes. And I love how you look at it and connect everything. So
just stick with me, if you would, through this break here. Let's go take a look at a 30-minute chart for the euro. See if we can try to find some kind of pattern out here where you can take a look at a possible trade. Alrighty?
Okay.
Alrighty. We'll be back with Scott going out to beautiful Colorado Springs. This is Steve Rhodes. This is TFNN. We'll be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Think or Swim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We're on the line with Scott from Colorado Springs. We're taking a look at the euro. Now, I'm taking a look at the euro futures out here just because I've got live feed data on it. Now, Scott, when I take a look at this, and I've got a 30-minute chart up on my screen here, what I'm looking for is an A to B equals CD down pattern. And the only one that I can identify here that makes sense to me would take this currency pair down to about the 1.2693-ish type level, which would give you a 0.786 Gartley buy pattern. And what would be nice about that is that the euro had quite a breakout session back here on about 8:30 to 9 o'clock in the morning on October the 15th, and the low there is 1.2680. So that's a pretty decent place for you to put your back up against the wall and take a trade inside the euro. So somewhere between 1.2680 and 1.2694-ish, something like that if you're going to trade the currency pair.
Okay, fantastic. Thank you, Steve.
Hey, no problem. Any other questions that you got that I can help you with?
No, sir. That'll do it. I appreciate your help.
Stay safe. Thanks again for calling in. Have yourself a great day.
Will do. You too.
Thank you so much. That was Scott in beautiful Colorado Springs, folks. If you've never been out there, just a lot of great sightseeing out there, great resort, the Broadmoor out there. So that's a nice little place to take some time to travel and then take a drive up to Pikes Peak. Nothing like it. Let's go out. Let's continue out west. Let's go to British Columbia. Let's go to Janet. Janet, thanks for calling. Thanks for holding. How are you this morning?
Hi, Steve. Very well, thank you. I just thought I'd ask you about Fortuna. I did own it, and I got out of it, expecting a retracement. And, it looks quite strong to me. When the other silver stocks were going down, this thing was going up. But I know looking at the daily, that's not quality volume.
What's the ticker symbol on that, Janet?
Frank Silver, Frank Victoria India on the Toronto, FVI.
On the Toronto, okay, yeah, and I don't have the Toronto. Let me see here. I think I've got it on the
FSM on the...
thank you. Perfect, okay, thank you.
Sorry, they're doing the same thing, it doesn't matter.
Got it. Yeah, okay, perfect, okay. I got it up on my screen, so go ahead.
Well, I'm looking at it, and it's not quality volume on the way up. But it just seems to be hanging there. And when all the other stocks were going down, this thing was going up. And I know it's a strong little stock, silver stock, but I'm trying to figure out a place to get back in.
Okay.
And I can't.
Okay, so if we take a look at Fortuna Silver Mines, FSM is the ticker symbol. We'll take a look at a couple different places, maybe so that you can try to scale back into it. Now, what I've got on my screen here, it shows the TAS market profile. So let's try to use those to our advantage out here, and it shows that price is kind of equally spread. So if I were to give you the first place to take a look at a entry point. Well, first, let's take a look at the box itself. And right now, it's run into resistance at the top of the box, which is 479. If Fortuna Silver gets over 479, closes over 479, your entry point might be 479 on a pullback into that old resistance level, letting it test that, rejecting it, and then moving higher. So that's the first place to take a look at. At this stage, what we know is its rejected price up there. Therefore, if it pulls back, your next area to look at is the area where you've got the largest number of buyers and sellers. That's going to be at the $4.56 level. So that would be another place. So if it doesn't break 479, 456 becomes your price point to monitor. And then finally, 433 becomes the price to monitor. And that's going to be the bottom of the box. Now, you may have to shift that bottom of the box because it had a nice little breakout type session-wide price spread, accelerating type volume on October the 8th out there, and the top there is 435. So 435, 433, I wouldn't parse a couple of pennies out there. I would say that I'd be focused really on that and maybe just you scale into it out here. But I do believe that the mining stocks as a group, in essence, they're just kind of slowly walking out the side door here. And those are the levels that I would be looking at for an entry into Fortuna Silver Mines. I hope that helps you out.
Thank you, Steve. That does.
Absolutely. That's thanks so much for calling. That was Janet in British Columbia. We get back from this break. We're going to go take a look at GoPro with Mike in Pennington, New Jersey. Then we got Mike in Thailand. We're going to spend some time with him taking a look at the Dow Jones. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow up about 80 points right now. S&P up 21. Composite up 61 points. Let's go out to Pennington, New Jersey, to Mike. Mike, thanks for calling. Thanks for holding. How you doing this morning?
I'm pretty good. How you doing?
Excellent. Thanks so much for asking. You're interested in taking a look at GoPro, GPRO. Tell us what you're doing and how it can assist you.
Well, I got in at 75.10, and I got out at 78.16.
Nice job.
That looks like it may continue.
Yes.
To get to 80, that's the area what I'm thinking it's going to get to. But between now and Christmas, I'm wondering if they're going to run it all the way up. And there's news came out yesterday that Microsoft is going to get into the space too, but I'm not sure how fast they're going to do that. So.
Well, I've got a 120-minute chart on my screen. Let's just take a look at the A to B equals CD pattern and an intraday pattern out here. So the low is around between 6 and 8 a.m. on October 16th as our A point. Our B point that I would be using on this is the high around between 6 and 8 a.m. on October the 17th, and a little retracement down into about the 4 o'clock, 2 to 4 p.m. on October 17th. And you say $80, and I say you're right on the mark there. 81.90 becomes your 1-to-1 A to B equals CD to the upside. What GoPro has done here, because it's got such a lack of data, hasn't traded, a lot. What I'm doing, and why I went down to an intraday chart here, Mike, was just to first just take a look at the market profiles as well. I know that it made a higher high with less relative strength, and then had a bear sash candle on the way down when it made its high. So the pullback made sense. The question is, how far does it pull back to? It looks like you pegged it by getting into a long trade here. I would say that what it has also done since those highs were formed back on October, I think it was October the 7th, since it's formed those highs on October 7th, we've also seen a bit of a change in trend if we go ahead and we use our market profiles. Because what we saw GoPro actually do here, this is the 120-minute time frame chart out here on October 20th, yesterday, was it got above that market profile resistance level, 75.61. Old resistance should become new support. And what GoPro did from 10 to 12, from 12 to 2, from 2 to 4 out there, was continue to test that level and reject it and stay above it. So now that says to me, very likely you're going to see 81.90, 84.38. And because, as you pointed out, you said, hey, will they run it up? It is kind of the new sexy stock out there. I don't. They have such good market share. I don't know how. You'd almost think a company like Sony would be better off trying to compete with them than Microsoft when it comes to video type stuff. So I don't own a GoPro. But it seems like it's kind of like the new Tesla,
Right, exactly.
of stocks out there. So I think from a momentum standpoint, it's what's so hard to do is figure out, because this thing wasn't really pulling back to a breakout area of any significance. So it's kind of hard to figure out what it was really doing out there. But I think the bottom, if we just utilize the 120-minute chart, I think the bottom is in. Now, the daily basis is 80.56. So that's its daily market profile high. And that's a new box that began maybe a couple days ago. So if it gets above 80.56 out there, then I think more than likely it is going to get back up to the highs.
Right. Okay.
Does that help?
Yep, pretty much what I was thinking. Yeah.
Okay, perfect. Hey, I like how you're thinking. Now, next time you take a trade, call in and tell us what that trade is.
Okay.
All righty?
Sounds good. Thank you.
So some of our other tigers, they like to bag some of your money.
All right. I'll keep an eye on that. You want to look at another one? If you got a minute, I was looking at Heartland Payment Systems, HPY.
HPY.
I was in this last year, and it went up about 100%, and I'm consolidating now. It doesn't look like it could do much more after that year. I'm not sure.
Well, let's take a look at it. It is. Here's the thing, though. It is up above its swing point from January 7, 2014. So it made that 100% move of a move. No, it's not up above it. That's where it really, if it gets above the it gets above that January 7th high at 50.44, then it could actually. Yeah, it could move higher. It could be just simply making a small A to B equals C to the upside. And how you'll know that is if it takes out instead the October 14th high, and it does with more than 370,000 shares. So if it gets over 51.69, it would look like to me that it would run topside, continue to move higher.
Okay. All right, thank you.
You bet. That was Mike in Pennington. Let's go to another Mike. Let's go to Mike in Thailand. Mike, how you doing today, this evening?
Okay, Steve. Yeah, you're pretty observant there. How about yourself? I'm doing all right.
Doing just great. Thanks so much. You wanted to take a look at the Dow specifically, or tell me how I can help you?
No. The utilities. Now, here's my. Let me fill you in on a little overview here.
Sure.
You did an interesting job on. You're calling the bottom, and the bottom it did come, and. I didn't think we were going to see this market rally so strongly as it has. I figured it would bounce, So
sure.
But anyway, so here's my question to you: what is it going to take for you, for Steve, to think that this market has topped and then we're gonna head south again? You're really bullish, towards that bottom there. You're saying a massive bottom is being formed, and sure enough, it came in, and we got more than that. Now all of a sudden, I'm thinking we're way overbought. What are you thinking? And I'm looking specifically at the Dow utilities, which are not budging today, while the whole rest of the market is taking off like a rocket. Go ahead.
Yeah. So if we, so first you gave me a mouthful out there. So the very first thing that I've got to do to answer your question, what would it take me to get bearish? It becomes a really pretty, well, it takes a couple of factors. Number one, the lows in the S&P have to be taken out. So the S&P has given us just really terrific signals out here with the hammer candle that had formed on October 15th. That was after confirming a Gartley buy pattern. The second Gartley buy pattern since November of 2012. That's how strong this market is. And if you were a follower of H.M. Gartley's work, you would not ignore that pattern. And you would not ignore that pattern because of the hammer candle formed on a daily and the hammer candle that had formed on the weekly time frame out there. So it requires taking out those lows from last week inside of the S&P 500. That's one thing. Now, to get kind of intraday bearish, what it would take the summation index to pop back below the zero line inside of the New York Stock Exchange. So that has just begun to, this also, the New York Stock Exchange has now what it's done is it's gotten back to the extremely bullish side of the market. So not so much Steve Rhodes calling the market or me being bullish. It's just the stock chart patterns that I was taking a look at where I was calling for a significant low. My read of what the markets were doing. Now, what the New York Stock Exchange has done here this morning, Mike, is it is back above 10,387.17. That, to me, is the final piece of this major bottom. And the reason is because that is the 2007 top. And inside the New York Stock Exchange, that is the last indice to get back above a consolidation level. Now, in the NYSE, it's 6,200 points, which does open it up to, at some point in time, as long as it stays above that level, trading up to 16,500. But let's not, I don't want to get too carried. So as long as the price oscillator stays above zero, the summation index continues to move higher, then it would have to, if it gets, I would maybe shift to a very short-term bearish type outlook if we see the summation index turn down and price oscillator get back below zero. But in the first hour, what I said was I would like to see, and I don't know if this will happen, I'm open to seeing one more sell-off, but not take out the lows. Today's October 21st, right? So within the next 5 days, so here's the Steve-O prediction, if I were to pull out my crystal ball. If between now and the next 5 calendar days, October 26th, October 27th, something right around there, we were to see one more push down in its retracement, and that's all that it is, and it doesn't take out the lows, that becomes the area to buy this market. But the market has the market has given every signal possible, in my opinion, and one of those signals that we also can't ignore. So you got the summation index for really all three now: the Dow, the Nasdaq Composite, and the New York Stock Exchange, all having turned up. So you can't ignore that. Because those are trending tools that take a little bit of time. They're not going to call the bottom. You're not going to buy a bottom tick with that like you can with an A to B equals CD pattern. But when they do shift, because they're lagging indicators, they're providing us with an important message of the markets. And the Dow itself also is now truly back inside its range. I had the Dow actually in a consolidation pattern from 16,333 to about the 17,150 level, and it's back inside that consolidation pattern. So that's another bullish sign for me inside of the markets. Then really kind of the piece that I was looking for, and newsletter subscribers know what I was really looking for, was the QQQ ETF. And the QQQ ETF has got the most amazing volume pattern out here. It's kind of like Google, but a little bit different. And what the Qs do is the Qs make bottoms with high volume, big washout volume. And unfortunately, I've got some kind of delay in my chart out here. But last week, Wednesday, Thursday, whenever the Qs were pushing down with volume, that was actually the signature. I think it was like about 130 million or so. That's the signature that has been prevalent going back so long. So there's a lot of folks that are calling to know for the huge market top to have been in, and just looking for a bounce and a retracement. And maybe they're right, and I'm wrong. But I the market at this stage is playing out the way that I was calling it, so I don't have any reason to actually, change my opinion on that. And now that my system, so now we've got now I've got the cues. So if we take a look at the volume, it was on October 15th, and the volume there was 108 million shares. That's big volume to the downside. And a lot of times people will take that big volume to the downside and say the market's got to go back down there and test it. That is not the pattern behavior of volume when you take a look at the QQQs. And all one has to really do, because that stock chart is available to most everybody out there, is go back and take a look at all the significant bottoms really since 2009. It acted this way even before that. But go back and take a look at it, and you'll see that they all have this same pattern out there. And so I always throw out, is this time any different? And I don't think that it is. And now you got that kind of nice V shape out there. So that's what I would be looking at. I don't take a look at the Dow Jones. You talked about the utilities, right? So what I don't recall the symbol off the top of my head for my system. But let's just take a look at the XLU. Would that? I mean, in essence, that would be about the same thing, would it not?
Well, just go UTIL. I use I don't use anything fancy. I'm using stock charts.
I don't know what that ticker symbol is off the top of my. And I thought I had it here, and for some reason I don't have the.
$sign UTIL at least on stock charts it is. I got something to play a little devil's advocate with you, when you're, when you're ready to hear it.
You're a genius.
If you have time.
You're a genius. You know that? You're a genius, because that's what that's how it worked on my stock chart as well. Okay, so all right, go ahead. It's now your.
You're stretching it. I think you're stretching it by calling me a genius, but here's what's on my mind. Are you ready?
I'm ready.
I want to run this by you. I want to see what you think. And
sure.
I want to know what all the guys at TFNN think about this. Look at that. As of yesterday, as of right now, we're less than 1%. Do you realize on the Dow Jones Utilities, we're less than 1% of taking out the June 28th all-time high. Do you realize?
Yes. Inside the utilities, I do. Yep.
So what I'm thinking is once that gets tested, it's gonna reject it. It's gonna reject higher price. The utilities are gonna start heading lower, and they're just gonna sink this whole market. This whole market is just gonna top out, and then we're gonna start heading lower once again. It's just gonna really. What do you think about that?
Well, can I give you the opposing viewpoint?
Absolutely. That's what I want to hear. I don't want to hear why I'm right. I want to hear why I'm probably going to be wrong. I want to
give you something to consider. Now, I know that because of your internet speed and everything here during the evening, you're not tuned in on Tiger TV. So when you do pull up the archive of this show, go take a look at this chart pattern. Now, what I've got up on my screen is I've got the Dow is on the upper half and the Dow Jones Utility in the bottom half. Can you stay through this next break and then we'll finish it off?
Yeah. Sure,
absolutely. Okay. So we're going to go back to Mike in Thailand, who asked a great question. And what we're going to show Mike is the divergence between the utilities and the Dow, and it's the utility divergence that usually points the way. This is Steve Rhodes at TFNN. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. We're going back out to Thailand to Mike. And Mike, so when you get a chance to watch this segment on Tiger TV, the bottom portion of my screen is the Dow Jones Utility Average. The top portion of the screen.
Steve, I can see both of those charts, no problem. Even though I'm not tuned in to Tiger TV, I have a bunch of charts open.
Okay, perfect.
now.
Okay, so if you so on my screen I got the Dow Jones on the top, the utilities on the bottom, and you'll see without a doubt there is a directional correlation between those two. They do the tango, and that's what you love to see. Then when they take a look at divergences, you want to understand which one really points the way. And what you'll notice here, what I've noticed, is that when the utilities is making a divergent, a lower high, and the Dow is making a higher high, it is the utilities that point the way. Likewise, when the Dow is making lower lows and the utilities are making higher lows out there, it is the utilities that, again, are pointing the way. So you just pointed out something, very important. One, you were coming back and taking a look at the June highs, but I'm really looking at the pattern right now from the October high. And what the utilities has blown away the October high. We see this divergent pattern. It's the same kind of thing that existed back in April of 2014 when there was a significant low that was put inside of the Dow out there. So that's the opposing viewpoint in taking a look at divergent patterns, what they've meant in the past out there. And, this just confirms for me more so that even though you had IBM kind of blow apart in the Dow, that the market wants to move higher. So I would say thank you for that. Uh-oh. I think we lost Mike. Hey, let's go. We've got one more Mike on the line out here. So before the day is out, let's go to Mike in Massachusetts. Let's take a look at TNA. Mike, I think you're long this. Tell me what you're doing, how I can help you out.
Yep, I'm long. How you doing, Steve? I'm long right now at 59, and just want to hold on to it for this run, hopefully, that we're making.
Yeah, you really should. I think that my expectation here, so the last confirmation or another confirmation that this is a really significant bottom out here, is that we should see the Russell 2000 really begin to pick up steam to the upside and start to lead. So the Russell 2000, the growth stocks, ought to begin to lead. Now, inside of the Russell 2000, it's also going to be the first one up. Here is the 5-hour chart inside of the Russell, and on its 5-hour chart, there's a possibility that it's made its seventh wave that we're in right now. And so it's either the seventh or the second. I can't tell which is which. But this could actually be the first one that begins to pull back out there. So I would still stay in this trade to the long side out there. But you keep stops in place, just do that. But I think the Russell 2000 is one of the indices to be long for sure. So I congratulate you, on that trade out there. I can tell you in a 5-hour chart, support ought to be 1090.90. And you're right around the 1105-ish type range right now. So that's what the 5-hour chart is giving potential signals that we could see some type of a retracement out there. And the 2-hour chart, the 120-minute chart, it's really got the same kind of pattern. I'm not seeing any kind of divergent patterns, though, that I would be too worried about. And it looks pretty darn good. To me. So I think you're in the right spot, and I really I congratulate you, and the market's rewarding you for that trade out there. But is there something else in here that you want to take a look, or is there anything element about it that you're looking at that I can assist you with?
Well, I'm wondering if the IWM is going to, where that's going to go. I usually, I try to use that as a gauge.
Well, I'll say what I would be looking at is the 0.618 retracement as your next resting stop. Inside TNA, that's about $69.35, but you should gauge everything off the IWM. All right, my friend?
All right, thank you, Steve.
You bet. Thanks so much, folks. Have a great Tuesday. I look forward to seeing you tomorrow morning. Have a great trading session.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers subscribers of his expert market opinion each market day with his Opening Call newsletter. Right now, you can get a 2-week free trial to the Opening Call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.